Dollar General was one of the worst performing S&P 500 stocks in 2023. While the S&P 500 was up almost 25%, Dollar General fell 45%. If we look at the stock chart here for Dollar General, it goes all the way back to 2010. You can see the steep increase in price, especially since 2018. It peaked around the end of 2022 at around $250 per share. Then it fell all the way to about $105 per share, and it's been trading at about $130 per share now. If we add the S&P 500, the blue line here, you can see that Dollar General has still performed better than the S&P 500 since 2010. But more recently, the S&P 500 in the last 5 years has done better. If we also add Dollar Tree, its competitor, when we add Dollar Tree, the purple line here, you can see that Dollar Tree has actually performed better than Dollar General. Especially the last year, it didn't fall nearly as much as Dollar General. If we look at the price-earnings ratio, a measure of valuation for Dollar General, the price-earnings ratio is at 15.5 now. If we compare it to its competitor, Dollar Tree is selling for about 25 times earnings. So is Dollar General a buy? I'm going to look at this today. If we look at the S&P 500 PE ratio, a measure of valuation, that's how expensive things are or how inexpensive it is. This is basically a measure of valuation, whether the stock market is overvalued or undervalued. It's at 25 right now, which is a little bit on the higher end. Now, if we can actually get Dollar General for 15 times earnings and it performs better than the S&P 500 over time, that may be a better buy than the S&P 500 right now. So that's what I'm going to look at. Now, Dollar General isn't some company that's going to go out of business anytime soon. It's not a company that's a category killer like Office Depot or Bed Bath & Beyond or Toys R Us. Companies that are basically have gone out of business or are going out of business. Toys R Us, the so-called category killer store, a store like that has gone out of business. Office Depot, an office supply store, that store is slowly closing stores. If we look at since 2019, 1,300 stores. Now, by 2021, only 1,000 stores. So it's basically closing stores, just slowly going out of business, sort of like Kmart and Sears. Now, Dollar General and Dollar Tree are not in a situation like this. They're not being impacted by the internet nearly as much as these category killer stores. If we look at Dollar Tree, for instance, Dollar Tree, you can see the upward trend in sales for Dollar Tree since 2018, 22 billion, 28 billion in 2022. Dollar Tree has 16,300 stores at the end of 2022. Dollar General has even more stores. It has 19,104 stores. This is the map of the U.S. You can see all the stores in the different states. The yellow is Dollar Tree. Now they have a new store called the Pop Shelf store, which is basically like a small store that's a home accessory. I've never actually been to one. I'm going to look at a video in a little bit showing that. And the gross margin is actually higher than Dollar Tree. Now, if we look at Dollar General, their sales have been increasing. In 2022, the most recent annual report, their sales increased 10.6% to $37.8 billion, and same-store sales increased 4.3%. Operating profit increased 3.3% to $3.3 billion. Now, in the more recent 2023 quarter, their sales increased at a slower rate, and then their same-store sales actually decreased for one quarter. They attributed that to an increased amount of theft due to their self-checkout. So that's an issue they have to deal with. In 2022, Dollar General opened 1,039 new stores, remodeled 1,795 stores, and relocated 127 stores. And then in 2023, they plan on adding 1,050 new stores. And then their goal for the 2024 year is to add 800 new stores. And I read that in 2020, they opened about 1,000 new stores. So adding around 1,000 stores every year is nothing new to Dollar General. Also for 2024, they plan on opening 30 new Pop Shelf stores. That's their high gross margin store that has a little bit higher prices and fancier products. I'm going to show a video on that a little bit later. One thing that I really like about Dollar General is their focus on rural America. Now, rural America is an overlooked part of America, and that's basically how Walmart got started. They focused on rural America. They put businesses all over where there weren't any businesses, where there were just mom and pop businesses and small grocery stores. And Walmart eventually put all of them out of business. As Walmart started to open, they would go out of business. Walmart was more competitive. They had a bigger store, more selection, better prices. They eventually went out of business. Dollar General is sort of doing the same thing with rural America, but they're picking places where there's not even a Walmart. So they're picking places that are even smaller. Now, Dollar General says more than 80% of our stores serve towns with 20,000 or fewer people. Dollar General often has a profound impact on rural America, according to this article. For many communities, it's the first commercial investment in many years. So they serve a part of the country that Walmart doesn't serve directly. You have to maybe drive 20 miles to get to a Walmart. You may have to only drive 5 miles to get to a Dollar General. A mom and pop store may be a business where the owner takes a trip to the city, maybe 45 minutes, an hour away, goes to the local grocery store or Walmart, buys the food there, then takes it back to the town to resell. So you can imagine the produce and a lot of the stuff is going to be pretty old by the time it gets back. So basically the mom and pop stores may not have a distribution center like Dollar General has. Even though Dollar General may not have a huge selection, most mom and pop stores don't either. So Dollar General is probably going to have better prices and more items than a mom and pop store. So as a result, the mom and pop stores will probably go out of business. And Dollar General may often be in areas that are so rural that there's no Amazon Prime delivery or Amazon Fresh deliveries. Or if they have deliveries, they may be delayed by several days, where if you get something from Amazon Prime, it may take several days. So Dollar General is most likely not competing against Amazon Prime as much as Walmart is. Now, Dollar General is so big now, they have so many stores that they're probably running out of small towns and rural areas to expand to. So they do compete in some areas where they actually have lots of people. This map right here of Las Vegas, for instance, and there's no rural areas in Las Vegas. So basically, they're competing with Walmart and Dollar Tree and everyone else. They're probably not as competitive here in Las Vegas as they are some rural town in the middle of nowhere. If you go to the Dollar General website, they actually have lots of coupons for different things. And if you actually click on it to see that they have something in stock, you can actually see add deal. For instance, you can go to the Dollar General. Let's say you're interested in buying some cereal. You can look here to see if they have it rather than driving, all the way across town and then finding out they don't have it. Whereas Dollar Tree doesn't show that. So I can see here that there's 5 boxes of Frosted Flakes at this particular store. Now, unfortunately, you can't actually have it shipped, but you could go to the store then and buy it. Now, if we go to Dollar Tree shows the items, but then it won't actually show if they have it in stock. And if you actually go to Dollar Tree and you want to buy something, it'll say minimum you can buy, you have to buy like a case of whatever it is you want to buy. So if you want to buy these chocolates, for instance, it says you have to buy 36, one case. So you have to buy like $36 worth. And then you could add this to the cart for in-store pickup, but you'd have to order at least $45 worth of chocolate. So not the most useful thing, but they're trying to get bulk orders online. So I do like how Dollar Tree has this, and I do like how Dollar General has it with showing the inventory. Going to the Guru Focus website for Dollar General, doing the discounted cash flow valuation, this metric is going to show us whether or not Dollar General is overvalued or undervalued. And it's predicting it, so it's not perfect. It's using the annual percentage growth rate in earnings per share, the 10-year average. More recently, it's actually gone down a little bit in the last year or so. But anyways, regardless, we're using this number. If we look at this chart, it's showing that we have a 39.24% margin of safety if we buy at today's price. So more than likely, if it continues to grow at the future at the same rate, it would be safe buying this. Now, if you buy something like Walmart, it's going to be in the red because it's overvalued. If we compare it to competitors now, we go to Dollar Tree. Dollar Tree is showing a margin of safety of minus 36%, so it's overvalued. If it's in the green, then there's a margin of safety, it's undervalued. Now, BJ's Wholesale, I don't know much about BJ's, but it's showing that there's a 49% margin of safety that is undervalued. But Dollar General has a 15 price earnings ratio, which is lower than most of its peers. If we look at Target, Target has a 18 a PE of about 18, and that's after the stock price fell quite a bit, but it still doesn't have a margin of safety, so it's considered overvalued. Walmart is showing that it's overvalued by 126% because it's not growing. If you look at the revenue, if you look at the earnings per share growth rate in the last 10 years, it hasn't grown very much. It's actually had a negative growth rate. And if we look at Costco, it has a minus 120% margin of safety because Costco's always got a high price earnings ratio. And so far this looks pretty good. There's not too many other ones here. I'm not familiar with these other names here. These are weird ticker symbols. I think these are overseas something. So right now, Dollar General is looking pretty good to me. And that's why I've got shares in it. If we actually change this to free cash flow instead of earnings per share for the discounted cash flow calculation, it doesn't do very well because Dollar General is using a lot of they don't have a whole lot of free cash flow because they're buying back the shares, they're paying dividends. Dollar General is a growing company. They're spending a lot of their money growing the stores, opening new stores. If we look at the dividend yield for Dollar General and the dividend payment history, the dividend yield's at 1.76 right now. It has a dividend growth rate, this is the 5-year, 15.3%. They've been paying a dividend every year, at least as far back as 2015. And the dividend yield has gone, as the price has gone down, the dividend yield's up almost to 2% at one point. And now it's dropped down a little bit. And they're buying back their shares. 3-year, a 4.5% 3-year share buyback ratio. Both Dollar General and Dollar Tree have spent billions of dollars buying back their shares. So the earnings per share will go up for investors. By the way, I have a nice referral link for a Capital One Saver One card. You get 3% cash back on dining, entertainment, and at grocery stores and streaming. There's no annual fee with this card. And when you spend $500 within the first 3 months, you get $200 cash back. It doesn't get much better than that. So check for my link in the comments or description. So what happened to Dollar General? Why did their stock price go down so much? The most recent quarter, Dollar General blamed their poor earnings on theft and weak consumer demand. Dollar General shares tanked Thursday after the discounter provided a bleak outlook for the rest of the year because of rising thefts and weak consumer demand at its 19,000 stores. They're blaming a lot of the theft on the self-checkout. Now, stores like Dollar Tree often have long lines because they don't have self-checkout. I like the idea of self-checkout as long as people do what they're supposed to. And so they're blaming this that people are putting stuff in their bags and not checking out. And that's the reason why their profits are down like 41%. One study of retailers in British, UK, Britain, and other found that companies with self-checkout lanes and apps had a loss rate of about 4%, more than double the industry average. Dollar Tree is the latest company to backtrack on self-checkout. So they're planning on cutting back on the self-checkout or removing them completely to try to improve the loss rate. If we look at details for the third quarter 2023 results, net sales increased only 2.4% to $9.7 billion. Same-store sales decreased 1.3%. Operating profit decreased 41% to $433 million. As a result of all the self-checkout, I think that's kind of the problem. And so I'm thinking that this is a good opportunity to buy Dollar General at a lower price. They're going to solve this problem with the theft, with the self-checkout, removing it or watching over it. And then I think the profits will get back up to where it was previously. If we look at Dollar General, if we look at the earnings per share growth rate, the 3-year annualized 17%, 5-year 13%. More recently, this last quarter it was down, but I think once they solve this problem, they're not the only companies that have problems. To try to get the labor cost down with self-checkout seems like a good thing to do, but it doesn't always work out the way you intend. Look at Tesla tried doing all the robots. That didn't work out, and then they fixed it and removed the robots, and the production went up. So if we look at the price earnings ratio for Dollar General, it's been higher than what it is now. It's usually been about 20. So every year around 20. This is the average. And so I think it's undervalued. If you look at the price to sale, it's usually around 1.1 to 1.4. Here you can see here. So Dollar General has a price earnings ratio of 15. You look at Dollar Tree, it's 25. Price Smart 20, BJ 17, everyone's higher than Dollar General. Even Target is higher. And the high for Dollar General in the past has been 27, and Dollar Tree has often been at 30 times price earnings ratio. So I think Dollar General has the possibility to double maybe in the next couple years. If we look at return on equity, now Dollar General doesn't have much equity because they keep buying back all their shares. Their return on equity 43, which is good. Return on assets 8.3, which is way higher than Target's 5.2. Operating margin, this is what I really like Dollar General better than Dollar Tree. So for the longest time, Dollar General has been charging more than $1. So they've had the head start on Dollar Tree. So their operating margin is 8.8%. Now their gross margin has always been a little bit higher than Dollar Tree until recently. 33%. Usually it's around, I think, 30%. Dollar Tree is usually like 29% for their gross margin. That means the difference between the price that they pay for the product and they sell the customer. So basically what you buy it at, you buy something at $1, you sell it for $1.30, or in this case $1.33. The net margin for Dollar General just has more of a markup than Dollar Tree. So the prices are a little higher. That's good for investors. So 6.4% net margin versus 5.7% for Dollar Tree. Now I have shares in both companies. I think they're both good. Annual sales growth. This is the annual sales growth. Dollar General 10.6%, Dollar Tree 7.6%. Target's only 2.9%. Here you can see the stores that they have. So Dollar General has 19,000 stores now. Dollar Tree has 16,000. And that includes all of the Family Dollar stores. That's another company they bought. Even with those, they still have fewer stores than Dollar General. Now here you can see the reported earnings per share. You can see the upward trend for Dollar General up until 2022. I believe this is the year they started rolling out a lot of the self-checkout. So the theft is probably related to that. Some of that may be the post-COVID shoplifting wave that's been taking over, and that's a bit concerning. But I think once they take care of the self-checkout, these numbers should go up, and it should be similar to the historic rate of growth. Well, we can see there's an upward trend in sales for the overall company. So $20 billion in 2015, $37 billion in 2022. I think by 2024, it's going to be even higher. Now, the net income hasn't always been completely up. Because of COVID, it's up and down a little bit, but it's an upward trend. So $1.1 billion 2015, $2.4 billion in 2022. And it's going to keep going up most likely. Now, one thing I'm not really super happy about is all the long-term debt. It'd be nice if it were a little bit less, but it does look to be manageable. So they have $15 billion in long-term debt. By the way, most of the long-term debt, I believe it's long-term operating leases for the various stores. And that's more than Dollar Tree, and it's actually more than Costco. This is Dollar Tree right here. Their operating leases are only $5.2 billion. Only. That's quite a bit, actually. Long-term debt, $3.4 billion. So Dollar Tree has less debt. If we go further and we actually look at Costco, which is a much larger company, their long-term leases are only $2.4 billion. So Costco must own a lot of the land. Now their inventory, one of the ways they're going to try to solve the theft problem or the shrinkage is they're going to try to reduce the inventory. So the inventories went up a little bit, but if they plan on shrinking the inventory, they plan on solving the shrinkage by reducing the amount of inventory. So I guess getting rid of some of the slow-moving items or doing more or having less items. I guess they're going to try to have more fast-moving items or have less items on the shelf. Okay, where does Dollar General make most of their money? And what category do they make most of their money from? Consumables is their number one category. That makes up 80% of their sales roughly. Consumables is not just food like I thought. It's actually paper and cleaning products such as paper towels, bath tissues, trash bags, disinfectants, packaged food, pasta, cereal, vegetables, candies, cookies, drinks. But it also includes health and beauty products such as toothpaste, shampoos, foot products, dental hygiene, and tobacco products. Now that's their number one category at 80%. And seasonal products would be like Christmas stuff, holiday, greeting cards, and then there's apparel. So this is roughly the same for 2023. So consumables made up 79.7% of their sales. Then most of the rest was seasonal. So people buying Christmas stuff, greeting cards, wrapping paper, that sort of thing. Their number one category, consumables, is actually a lower margin product. It's slightly lower margin. So the higher margin items would be these other items. Now the Dollar General has roughly a 30% gross margin on their products that they sell, so they basically marked up 30%. However, they have a new store called the Pop Store, and the gross margin is about 40%, so the markup's about 40%. Now they have roughly 100 of those stores, and they're actually planning on adding more. So their 2024 growth outlook, they plan on 2,300 real estate projects, 800 new store openings, including 30 pop shelf openings and 15 in Mexico. So these little ones in purple here, these are the pop stores. So I counted roughly 100 stores so far, and they're going to add 30 more in 2024 apparently. So what is a pop shelf store? From what I understand, it's about half of the product, about half of the store is housewares, but they also have food. So it looks fairly similar to a Dollar Tree. From what I can tell, it's very similar to what Dollar General has, but their stuff seems to be marked up a little bit more. One criticism I have for Dollar General is their slow expansion into western states. If we look at where the stores are, you'll see that the eastern part of the U.S. has way more stores than the western states. If you start looking at Colorado, Utah only has 11, 21 Dollar Generals in Nevada, and Idaho only has 6. And then also it shows that there's 38 stores in the state of Washington, but the first store was only in the year of 2020. So fairly new, and I think Oregon is also fairly new. And for the whole state of California, you only have 259, which is not very many. Also, Dollar General likes to point out that over 80% of their stores serve towns of 20,000 or fewer people. But I'm saying that in a lot of these small towns in the West, there are no Dollar Generals. They're actually Family Dollar stores. If we look at Family Dollar, which is part of Dollar Tree, they have stores in rural communities with populations of 3,000 to 4,000 residents. 6,000 to 8,000 square foot stores. And in the West, like especially Arizona and Nevada, you'll see a lot of these Family Dollar stores where you'll never see a Dollar General. If we look at the map here of the state of Nevada, the state of Nevada is one of the least populated states in the U.S. And there's only 2 or 3 big cities, and then there's basically a whole lot of nothing, a whole in between, very small cities. And so the great thing about that is there's no Walmarts or any big stores in between the big cities. So for example, if we pick some of these small towns, like here's one, Caliente. This is basically a ghost town, 1,400 people. It's out in the middle of nowhere. There's a gas station, and guess what? There's a dollar store. But guess what kind of a dollar store it is? Here we have it. It's a Family Dollar. So there's a Family Dollar in a city that's 2 hours away from Las Vegas. That's the closest city is 2 hours away. So if they want to go shopping, anybody that lives in a small town, they're going to have to drive 2 hours. So you can guess that most people shop at the Family Dollar. This is a perfect place for a dollar store. It may not be the most profitable, but this store is probably going to be there 10, 20 years with no competition. Okay, here we have another store. There's another place. I think this is the largest lake in the U.S., Lake Mead. I believe this is the largest lake. You've heard of Hoover Dam. On the backside of Hoover Dam is this tiny little city called Meadview. It's actually in Arizona. If we look at Meadview, the closest city I think is an hour away, Kingman, Arizona. It's like an hour and a half away. Basically, 1,100 people. There's really nothing there. Guess what? There's a Family Dollar. There's a Family Dollar store. So if it's 2 hours to Las Vegas. So if they're going to shop in Las Vegas, 2 hours away, 2-hour drive, like an hour and a half to Kingman. So guess where they're going to shop? Family Dollar. That's the perfect place for a dollar store. And you know, Dollar General could be in these places. It would be perfect. Compared to a lot of the eastern states that have Walmarts throughout the whole state, these western states like Nevada, a perfect place for little dollar stores in these little towns. Here's another thing I noticed about Dollar General. So they claim that they're mostly in rural areas, but Las Vegas basically has no rural areas. Now, they do have areas that are less desirable, that sort of the high crime areas, the areas where there's no grocery stores, also known as the food desert. And I noticed that that's where Dollar General seems to have put their stores in Las Vegas. So if we look here at the 15, if you've ever been to Las Vegas and you've driven from California, you usually take the 15. So basically everything sort of east of this 15 is the less desirable, the higher crime area. This is basically a food desert area here. There's basically liquor stores and maybe one grocery store down here. But a lot of the grocery stores have been shut down due to crime or whatever other reasons. That it's not safe, high crime rates, high theft rates, not enough sales. So they've given up on this area over here. But yet Dollar Tree came in and they put, their stores. Most of these stores are in food desert areas where people probably have to commute 10 minutes or longer to go to a grocery store. All of these, with the exception of maybe this one here, are kind of the iffier neighborhoods. So if they're putting their Dollar Generals in areas that other grocery stores have given up on, urban areas where a lot of people may not even own cars, areas with high shoplifting, high drug use, is that going to be profitable? Are they going to get eaten alive with shoplifters? So that's another concern I have. And I think Las Vegas is a perfect example because Las Vegas is relatively a new market for Dollar General. And you have to say, okay, where are they going to put their stores? And this is sort of where I think most of these have been here a few years now. But I question whether they're going to be able to keep them open, because if everyone else has had stores and they've closed them down, why would Dollar General be able to survive when the other, grocery stores haven't been able to survive in these areas? So if you have a Dollar General in your city, a newer city where they're new to the area, do you notice that they put the Dollar Generals in sort of the rougher neighborhoods, or do they put it in sort of the nicer neighborhoods? If you look at Dollar Tree, you can see that Dollar Tree's stores are located throughout the entire city of Las Vegas. It's the good areas, the bad areas, everything. So you have some even over here, but when you look at Dollar General, you only see them on sort of the rough part of town. Also, you'll see that the 99-cent only stores are located throughout the entire city and not just on sort of the bad side of town. What other bad things are there about Dollar General? There's a lot of negative publicity about dollar stores recently, especially John Oliver did a recent episode on dollar stores, and he seemed to focus heavily on Dollar General, about their poor pay for their employees, employee treatment, messy stores, all that. So that's a negative thing. And there's lots of recent articles that are negative about Dollar General. You have articles like this, why Dollar General might just be the worst retail job. You've got numerous articles about how bad the pay is. So this is spreading. If articles like this and media start to spread, then it's going to be more difficult to retain and get new employees. You also have some downgrades about Dollar General. JP Morgan gave it its worst rating after a company presentation. This was back in September, before I think the stock went down. The one thing that they mentioned as the reason for their downgrade was the evaporation of pandemic-era savings, inflationary pressures of roughly 12%, and a big reduction in government assistance. So they had apparently a reduction of the government assistance program of roughly $90 per household per month, I believe, from the SNAP program. This is from the Federal Reserve. If we look at the excess savings, this shows it here in blue. This says excess savings 2.1 trillion. This is COVID stimulus. Now it shows the drawdown here in red of 1.9 trillion. So it's showing that in November of 2023, there's only about 290 billion left of that excess savings. So once that money runs out, then, the theory is that everything's going to slow down a little bit. The economy will slow down. There's also a shoplifting problem. You wouldn't think that dollar stores would be a prime place that people would steal from, because the resale value on these items that are like $1, they're not a whole lot. I wouldn't expect there to be a resale value on generic shampoos, 4-ounce things of toothpaste, 3 or 4-ounce things of toothpaste, and so on. But it shows here, this was from August of 2023. Family Dollar and Dollar Tree said they're going to lock up some items or stop selling them completely because of theft. We're taking a very defensive approach to shrink, Dollar Tree CEO told investors. Some of this included moving some products behind checkouts and locking some items up, meaning that employees would have to retrieve some items. At Dollar Tree, shrink costs increased 0.75% in the quarter. At Family Dollar, shrink costs were up 0.45%. Now, it doesn't take very long to find where these products are being sold. Now, the thing about the dollar stores is you typically wouldn't expect to find it on OfferUp, the app OfferUp. The stuff that you typically find on OfferUp, the stolen goods, they come from places like Walgreens, CVS, Walmart, Target, and you will see things like this. You'll see a 6-pack of Total toothpaste. I looked this up on Walmart's website. Each of these tubes of Colgate toothpaste costs $4. They're selling 6 of them for $10. And this is all over the US. It's not just here in Las Vegas. And if you actually look here, you'll see the other items that people are selling. They're selling the stuff that has been stolen. Shampoo, toothpaste, all kinds of stuff that, fits in your pocket. And when you actually click on the user's name, you'll see that they're also selling some lotion, different types of lotions, conditioners, and all for less than what you can get it in the store. And it's pickup only. This seems to be the main one where they sell their stolen stuff is on OfferUp. I looked on Craigslist. It's not nearly as common as OfferUp. Here's another person selling shampoo, 4 things of shampoo. Do you think these people really bought this stuff at a super price that they're beating Costco and Walmart and Amazon? They're beating all the grocery stores and all the stores in pricing because they're so smart. These are all stolen products. And you'll see, as far as I know, no one is stopping these guys. Here you can see there's some Tide. That's usually locked up. But it's up to the governments to crack down on this and to go after these people to try to make the buys or to make laws to force these companies to show proof of purchase when they're listing, 10 things of deodorant or 6 things of shampoo. Show proof that you purchased it legitimately. And right now, they're not doing anything like this. This is the Home Depot Vice President of Asset Protection, and he's actually calling for a task force, a nationwide task force to focus on retail crime theft.
Consumers Act. We want to see continuing legislation at the federal level around organized retail crime task forces, dedicated resources, and a dedicated agency, that can really kind of take the lead on this. Because right now, it's really for us retailers, it's whomever we can happen to go get to take this problem seriously is the one that will hopefully take this case and prosecute it.
Now, according to this, it's just a matter of time. The criminals will often be ahead, but over time, the laws catch up and the problem stops. Remember the piracy in the ocean? Well, the Kenyans that would board the boats, they put an end to that. They solved the problem. But for a while, the Kenyans were winning. Now, slowly, there's going to be progress made towards the shoplifting. And I think eventually they're going to get a hold of it. So it says here there's an Inform Act that passed. A federal law requiring platforms such as Facebook, Marketplace, and OfferUp to collect more information on high-volume sellers and help identify those who are fencing stolen merchandise. As you saw with OfferUp, it doesn't seem to be working yet, but laws like that are going to be passed and they're going to actually enforce it. And you're not going to be seeing people selling 5 or 6 things of toothpaste or shampoo, stolen stuff online. By the way, I have a super easy deal for you. That is, if you don't have a Discover IT card already. All you have to do is sign up via my link, make one purchase. It doesn't matter the amount. You could go to the dollar store. You could go to McDonald's. Make one purchase with the Discover IT card. This is a no annual fee card. There's no annual fee. You could have this 1 year, 2 years, 3 years. It's not going to cost you anything to have the card open. Make one measly purchase, get $100. Doesn't get any easier than that. So check for my link below.